Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. Before we hit the charts, I want to leave you with this. It's one of my favorite sayings here, and it's very apropos to what we do at Trading University regarding using the chart as our main tool of analysis. This is what the great physicist Dyson said about his colleague Richard Feynman. He said Feynman had a physical picture of the way things happen, and the picture gave him the solutions directly with a minimum of calculation. We think that's exactly what we do with the charts. We're big believers that absolutely the chart is an accurate reflection of what's going on with the underlying fundamentals as well as the market psychology. First market we're going to take a look at will be the Australian US dollar. You can see you had a pretty shallow retracement overall on the daily chart here. You weren't able to eclipse 89 even. You got a nice double top at 89 even. Markets shifted lower. Had big help from the Fed too, and that didn't surprise us that the Fed would just go status quo. The Fed policy is steady as she goes. You're looking at eventually higher rates in the States as the Fed continues to wind in the QE, and that's going to mean higher interest rates in the United States, which from our perspective and the market's perspective this week certainly is going to mean higher rates. It's going to mean a stronger US dollar. So we think that you continue to sell rallies in the Aussie. We think that this short-term correction that you've been in for the last month or so has come to an end, and we think you're going to see a resumption of dollar strength going forward. Next market, the Swiss. And you really see that in the Swiss franc too. Look at Friday. You had the big update. Following the midweek Fed news, the Fed was definitely supportive of the dollar. As we said, we think we're going to see higher interest rates, and we'll show you a chart on that too before we wrap it up. But we think, yeah, you're back on the upside in the Swiss franc here. You can see par. That's an intermediate term target for us. You got to move that target up in time now. We think you'll probably get there by year end, potentially even sooner. It's not all that far away. So we think you're back on the upside in the dollar Swiss. Relatively shallow correction, shallow retracement. We talked about that all along, and there you have it. We think you'll see higher highs in this market with potential resistance with the door open to par right now, to 100. Euro US dollar. Well, it was some great intraday trades on Friday. One of our clients sent me one, which is a fantastic trade. I'll show it to you in a little bit in gold, but he pulled one off in the euro too. There was some great trades Friday. Essentially, and this chart sums it up. Once the market had closed below this level, see that green line? That pretty much opened the door for lower prices. And there you go, and there you have it. So euro, again, another market where they shifted it back lower. It looks like you kissed that October low. This is a market that just recorded a 2.5-year monthly settlement low. So you have a 2.5-month low here. So we think the door is open to further downside here. Long term, our targets are coming in at just below 110. So a lot of room on the downside. Let me give you a daily chart and put that in perspective. 110, that's 1,500 pips away. A lot of room on the downside. Of course, you're going to have to see what's at 120 along the way too. So bottom line, we think you're going to continue to see lower lows in this market. So we'll continue to hold long-term shorts, otherwise sell rallies in the euro. Pretty exciting stuff. Here's the gold market. We're whistling the same tune we've been whistling at all along. You got to be selling rallies in this market. You got to be maintaining shorts. Here, I'll show you a day trade. Richie, a client of ours, sent us. And basically, it's the same thing. We do the same thing on the lower time frame charts that we point out on the higher time frame charts. There's a beautiful sell zone in place. It was fascinating. I'm very proud of Richie on this one. What he did so well is he let the market reverse first. He had patience. Look at how the market slices through 1,200. You get several closes below 1,200. That's definitely an indication the market wants to go lower. Then he was patient. He let it set up, and then you have a beautiful double top in a zone here. See, we painted that zone for us, a sell zone. It's just a retracement that statistically markets do. Markets retrace very often along the way. It's called risk tolerance threshold theory, and that worked for him, and he got short this market. He said he happened to be waiting. It went up here and made the double top. Here's the first double top. Here's the second double top. He said he put the stop on. He said he was a little leery trading late in the week. I understand that. But he said, it was not a lot of risk on there. So he took the trade. He knew that potentially he had a big sea change move here, but he didn't anticipate how low and how fast it would go. He said he woke up. He put the trade on, went to sleep. He woke up and the market was like $36 lower. And he was just like, wow. So he was very, very pleased with himself. He said that had been the biggest trade he'd made to date. So Good job, my man Richie. Back to a daily chart, we think you'll continue to see lower prices here. Pan out to we'll show you the big picture of the monthly chart. A lot of room down below. Gotta be careful trading these commodities. They're whippy. We prefer the currencies for those sustained moves. We think the euro will provide enough action as far as selling rallies, maintaining shorts there. But you can see on the gold market, a lot of downside below. Next market, the dollar yen. Look at the dollar yen just exploded on Friday. Big move. Well, that's the monthly here. Dropped down to a daily chart. What can you say? You got to continue to look to buy dips in the yen, particularly on those intraday time frames. So big up move in dollar yen. Hey, the cat's out of the bag in the dollar pairs in the dollar itself, meaning you're going to continue to see lower prices for the foreign currencies, higher prices for the dollar. One last market I want to cover for you before we leave, and this is the U.S. bond market, and this is essentially what we mean when we say you'll see lower interest rates in the United States. When the bond market goes up, interest rates go down. When the bond market goes down, interest rates go up. Now, interestingly, the bond market had been going up for much of this year. Finally at a climax in that market, finally it climaxed, and it did so right in our zone. Actually blew past the zone. However, you couldn't close above it. So basically we had a climax in our sell zone. And what did you have this week? See that white line? The white line marks the low of the highest closing candle on a weekly chart. So once you close below the low of the highest closing candle, we call that a change of direction. So the bond market had a change of direction lower, meaning if this market trades lower, you're going to see higher interest rates in the United States. Higher rates in the States are going to continue to support the U.S. dollar. Speaking of the dollar, here's the U.S. dollar index chart. Big day there. You saw you had a higher high for the dollar index. That's on a weekly chart. Pan out to a monthly chart, and I'll give you a scale here, and you really see how much room there is to go in the upside in the U.S. dollar. Likewise in the downside in the euro. A lot of room there. A lot of room below. Hey, we'll end it with a great quote from Warren Buffett. Our approach is very much profiting from lack of change rather than from change. Absolutely, we view the markets the same. We're not looking for any change here. We're looking for a continuation of the pattern already in place. Hey, thank you so much. My name is Jay Norris. I teach trading at Trading University. Everyone have a great weekend. We'll see you next weekend. Bye now.